So please stand by, everyone. We're counting down from 5 to 1. We're on 4 now. 3. Good afternoon, everyone. My name is Esther Awoni, business anchor at CNBC Africa. It is my pleasure to welcome you all to the maiden edition of United Capital's Pan-African E-Conference. Now, the theme of this E-Conference is fostering innovative cross-border financing solutions in Africa. Now, the outbreak of the COVID-19 virus has thrown the world further into economic difficulty, forcing global leaders, particularly in Africa, to look for innovative ways to address the fallout of the pandemic. Now, United Capital PLC is using this platform to stir up conversations on key issues on the continent by bringing together some of Africa's brightest minds to brainstorm and also to proffer solutions. Now, quickly, United Capital is a leader in African investment banking, asset management, trusteeship, and securities trading group, providing a bouquet of diverse financial services to individuals, companies, and governments, enabling growth at all levels. In the last 50 years, the group has innovated with each season and found smart ways to provide even more value to its clients by showing a spectacular ability to adapt to change. United Capital's Pan-African expansion drive is born out of the need to replicate its numerous successes in the Nigerian market to the broader African space. Now, it is poised to be the financial and investment role model across Africa, deploying innovation, technology, and special skill set to exceed all client expectations. Without further ado, let me just quickly introduce our panelists for today. Joining us for today's session is Fola Fagbule. He's a Senior Vice President at Africa Finance Corporation. Fola is an investment professional focused on infrastructure in Africa. He currently serves as a Senior Vice President and Head of Financial Advisory with overall responsibility for mergers, acquisitions, capital raising, and other technical advisory assignments at the Africa Finance Corporation. Also joining us today is Benga Makinde, CEO of UBA in the Republic of Benin. Mr. Benga he's a corporate banker with a demonstrated history of working in credit risk management, corporate banking, loan creation, and commercial banking branch management. Also joining us today is Wale Shonibare. He's the acting VP Energy, Power, Energy, Climate, and Green Growth at the African Development Bank. Now, Wale has close to 3 decades experience spanning Asia, Europe, the Middle East, and Africa. And last but not the least, joining us from Ghana today is Mr. Yofi Grant. He's the Chief Executive Officer of the Ghana Investment Promotion Center. He's also a renowned Ghanaian investment banker with over 30 years of extensive work experience in banking and finance. So please welcome our panelists today. Now, before we go into today's session, brainstorming on those innovative cross-border financing solutions on the continent, allow me to introduce our host for today, Mr. Peter Kade. He's the Group Chief Executive Officer of United Capital. Peter is a seasoned banker with 3 decades of cognate experience in finance, with specialist experience in capital market transactions across all sectors and market segments. Over to you, Peter.
Thank you so much, Esther. It is indeed delightful to be here today while we welcome our viewers to take the opening remarks. Eminent personalities here present, distinguished ladies and gentlemen. Thank you for joining us on this maiden edition of United Capital Pan-Africa E-Conference, themed fostering innovative cross-border financing solutions in Africa. Over the years, cross-border financing across sub-Saharan Africa has played a limited role in effectively addressing the funding gaps across economic sector in the continent. For instance, the FDI inflow from China has surged from $500 million in 2003 to $43 billion in 2017. Meanwhile, look at France, the Netherlands, the US, the UK remain the largest investor economies in Africa with over $60 billion investment, each one of them as at 2017. But on the contrary, data on intra-regional investment is scarce. You hardly get it. However, the AFDB estimated that between 2006 and 2016, intra-African greenfield investment grew from $4 billion to $10 billion, while the number of regional M&As doubled from 238 deals in 2006 to more than 418 in 2016. While the progress is laudable, no doubt, so much more is still required given the depth of the need we have within the continent. More recently, the socioeconomic impact of the global devastating COVID-19 has further exposed the vulnerabilities of the region as it continues to grapple with infrastructure development challenges, compounded by the capital flight to safe haven destinations. Obviously, this begs for innovative, homegrown financial solutions to help strengthen Africa's economic resilience and perhaps propel continent through a new phase of growth, now homegrown. For us at United Capital PLC, we are contributing our quota as a responsible financial institution and a reputable capital market operator by creating platforms such as this that we're in now, where our distinguished panelists, comprising the continent finance professionals, can provide insight into the wealth of experience on how to change the narratives. There is indeed need to change African narrative in terms of providing the homegrown solutions to our challenges. I am confident that all participants will gain useful insight in creating innovative financing solutions towards addressing Africa's most critical challenges by the end of this event. On this note, I say thank you for joining us and have an insightful discussion ahead. Thank you.
Thank you, Mr. Shadi, for your opening remarks. So let's just get right into it, into our conversation for today. Now, in his opening remarks, Peter just mentioned that cross-border financing in sub-Saharan Africa has played a limited role in addressing funding gaps across key sectors in Africa. Now, this is quite interesting to note if one just thinks about the gaps that we have, and of course the urgency when it comes to funding critical infrastructure across all critical sectors on the continent. So I'd like us to start by just reflecting on why this is so and also identifying what the barriers are. Fola, I'd like you to go first.
Thanks, Esther. Thank you, Mr. Shade, for having me on today. And good to be with everyone who's listening. It's a huge challenge, as you mentioned, Esther, and as Mr. Shade alluded to in his opening remarks. Across the countries that we work in, I work with the Africa Finance Corporation. Across the countries that we work in and that we fund projects in, we continue to find significant challenges with putting projects together that meets the requirements of professional investors, the kinds of investors who bring in, sizable, significant amounts of capital into critical infrastructure projects. You continue to find that project preparation, the fiscal environment, the environment around tariffs, the legal environment, the environment around getting these projects in a shape that are acceptable and attractive to institutional investors continue to be some of the biggest challenges that we face. But we work very hard to overcome those challenges. And one of the ways that we do that, one of the things that we're doing increasingly is focusing on export-led industrialization as sort of a key theme in all of our projects. So projects that are taking typically resources, improving on those resources and exporting them to international destinations, major international destinations. Special economic zones is a theme that we're following closely. We've made significant investments in Gabon, in particular, in special economic zones, and we're expanding that theme across multiple African countries. Heavy industries is an area where we see that there is a lot of room to make an impact. So refineries in multiple countries. We're working on a gold project in Nigeria, the first gold project to be done in Nigeria on an proper industrial scale. Bauxite exports in Guinea. We financed a quite significant bauxite export project in Guinea in a very difficult environment, but we were able to get it done because we're focusing on this theme of export-led industrialization, and as I said as well, special economic zones. We're also working in countries like Djibouti, small country, but with a significant amount of potential on similar kinds of projects. So those are the themes that we're following and trying to use to make an impact.
Thank you, Fola. Jofi, I'd like you to step in here. I'd like you to answer the same question, but I'd like you to also just focus more on the challenges that you see. Going into the conversation, we'll focus more broadly on what we are doing or what government or what can be done rather to address these challenges. Share with us your perspective on why we continue to see have those barriers.
Can you hear me?
Yes, go ahead.
Okay, yes, and good afternoon to all the speakers and the listeners. Indeed, the previous speaker did highlight the very, what should I say, the real critical issues that exist on the continent. And if you look at the numbers coming out, it's obvious that as a continent, we are not even monetizing our assets well enough. First of all, because of lack of investment, critical investment, but secondly, overwhelmingly, you see government policies that seem to be at variance to the goals that we want to achieve, especially for the private sector. So there seems to be this constant tension between private sector and government. That means that the regulatory frameworks that are there and that probably were initiated on the continent in the early 60s were probably more leaned towards national focus, a nationalistic economy where it was more focused on the centralized government interventions in business. But we've seen that over the past few years, and that has significantly changed. And we see the role of the private sector rising much more in national development than not. And if you look at over the past 10 years or so, you would realize that out of the 10 fastest growing economies in the world, 6 are from Africa. And why is that? That is because of governments taking a totally different attitude to private sector. But the problems still exist. Poor regulation, poor cross-border standardization and understanding. And so despite the fact that we have regional bodies that are supposed to facilitate cross-border trade and investment, these have not been effective because every country has insisted on how it wants to do things and not looking at the bigger market. But obviously, the bigger market presents a much better opportunity. The legal frameworks are sometimes also at variance with the direction. So I would generally put all those in policy inconsistency between national governments and their private sector. Then, of course, there are significant barriers to doing business on the continent. One is lack of capital. And if you look right from the 60s to today, and you look at businesses that are generating revenues of more than $1 billion a year, there are probably less than 10 that are indigenous. Most of the others are multinationals that came from outside the continent. So clearly, capital formation on the continent has been very slow. And it's only recently that we are seeing big companies grow, conglomerates come out from indigenous African investors like Dangote, who is a good example. We're seeing EcoBank. We're seeing quite a number of other institutions. And I was very happy to hear that United Capital was doing work across the continent and not focused in just one region. So those barriers are gradually being removed, but they still are there. Lack of capital, and lack of capital also goes with poor institutional growth. So because most of our companies are SMEs and SMIs, they are not properly structured to be able to attract huge capital. Most of our companies start very small, and in that micro space, they do not have the capable and composite human capital to be able to go the big step, take the big leap and go to become conglomerates and become huge corporates. So that in itself is one. Then there is also the culture of business. We haven't as yet inculcated the culture of business in a continent that is significantly populated by the youth. So, when you look at education on the continent, for example, which we all recognize has a lot more to be done, you'd realize that even business is not part of the core curriculum. We are still learning things that, make us academically smart, but not life savvy. And so we don't have a true, real business culture, which in itself has also affected our companies being small. We need more big thinkers on the continent who are looking across the continent and not just looking at their small microcosmic markets. And once they are satisfied, they are making profits, that's enough. And that, when you have that, then you can actually optimize and monetize the assets that you have. So Africa remains, Africa has over 30% of the world's mineral and raw material resources. That definitely should mean that the continent should be wealthy, but the people are poor. Africa has 60% of the remaining arable land left in the world. Still, we are being fed from outside. So the opportunities are there, but we haven't actualized them ourselves. We've actually, and maybe to use a radical analogy is to say that holistically, we've been lazy in waking up from the pre-60s, 1960s, to what we should be today. But I dare say that gradually that is coming. We have a faster rising and much more savvy private sector, most of it also being triggered by a large, knowledgeable diaspora, and the clear recognition that this is a market that could be a world player. Let me just complete by telling you, by 2050, Africa will be 1/4 of the world's population. Every fourth person will be an African. Now that tells you one thing. One, that this is a market waiting to happen, a consumer market waiting to happen. And two, a potential of actually supplying the world with a human capital to change things the way they are. And yet we still attract a small fraction of global FDI or capital flows. And this is because the regulatory frameworks are not there, the corporate structures are not there, the barriers still exist, as I've explained before and the previous speaker spoke about. So when you put all that in a pot, we do recognize that the opportunity is now and not yesterday. Yesterday is past, the opportunity is now. And we therefore need to restructure, retool, and re-spark the African engine.
Okay, Yofi, I'm going to ask you to hold that thought there. Benga, let me come to you. Well, Yofi and Fola have highlighted a number of challenges. I don't want us to go over, we know what the challenges are. I don't want us to spend too much time on that, but one of the points that's come out so far is that capital formation on the continent is slow. That is a fact. Benga, I'd like you to speak to this point. How do we begin to boost capital formation on the continent? Benga, can you hear me? Perhaps you can have Wale. Wale, perhaps you can go ahead and answer the question.
Hello, Esther.
Can you hear me? Oh, okay.
Hello?
Yes,
Hello, Esther.
I can hear you.
You can hear me?
Yes.
Okay, this is Benga, yes.
Okay, go ahead, Benga, please.
Okay, thank you very much. I want to thank you and Esther. I want to thank Mr. Ashade also for having me on this platform and my co-guest speakers. Let me just put it in this way. Today, we have Pan-African banks that have actually gone into Pan-African expansion across the continent. We have 3 headquartered in Morocco, 2 in Togo, and we have UBA Group. I work for UBA with presence in 20 African countries. And we have Central Bank in South Africa as well that have expanded into the African regions. And we have other regional banks that have also have presence in about a minimum of 5 African countries. So the essence of this Pan-African expansion is actually to solve some of these challenges that we have identified today. And I will go into putting things in the proper perspectives. The solutions that we have today, the problem that we have today, the solutions are actually within us because we have always heard issues around African solutions to African problems. And number 1 is the convertibility of our African currencies. We have today, our currencies are not convertible. We all rely on import of dollars or euros or pounds. And we have regional economic blocks. So there is a need for us to look inwards to solve these problems because the institutions are penetrating into African regions. And also we have sub-regional blocks. So there is a need for us to have currencies that we can use to finance the deficiencies that we have within. I had the opportunity of making a presentation to the Central Bank of Nigeria last year. And one of the things that we discussed is, why can't we have a common currency that will become convertible to finance infrastructure development along the West African blocks? So we need to put this in place. The judicial system also needs to be reinforced because there is a lot of inefficiencies in the judicial system and regulatory framework. Today, we have different levels of implementations of Basel II and Basel III by financial institutions across the various countries in Africa. There is a need for uniformity in the implementation of those policies and regulatory requirements. And another solution also is for institutions, private sectors to have credit ratings which will enable financial institutions to be able to provide the necessary funding that are required in order to upscale the infrastructure development and economic development within Africa. So these are the things that we need to have in place. Today, 22% of African businesses have access to loans. That should not be it because other developing continents like Asia have access to about 31%, while it's about 47% in other countries, in other developing economies. So I think it is important for us to look at how we can improve in all these areas. And all the regional bureaucratic network bottlenecks and regulatory bottlenecks also you need to be, there supposed to be a uniform custom practices across the regions for developments to happen and for financing to be able to available. Thank you very much.
Thank you, Benga. Wale, I was going to ask you a different question, but I'd like to take you up. I'd like to ask you, take you up on some of the points Benga just made. Collaboration within the regional bloc. We've talked about, and of course, having a currency convertibility so that things are easier for us here. And just listening to I think it was today that I was listening to the news, and I heard that the presidency is not too happy about the eco currency and how the Francophone region has gone ahead to adopt it. And there was issues around even the entire West African region adopting it in the first place because it brings back memories of what happened in Greece and the EU, and that has led to Brexit and all the messy drama that surrounded it. So there were questions about even adopting the eco currency in the first place. Now one region has gone to adopt. I'm just wondering, collaboration within the region. We're talking about the African Continental Free Trade Area. We want to break down barriers. We want to see freer movement of people and goods. But I'm just wondering, have we taken the necessary first steps? Have we been able to move beyond the rhetoric and get this done?
Yes, thank you, Esther, and thanks to United Capital for providing this platform. To respond to the question, I think we're taking baby steps. Obviously, the AFCFTA has now been signed. Nigeria came in a bit late, but better late than never. The key thing is that it's very important for us to improve cross-border trade. I mean, in Europe, cross-border trade is 69%, regional trade. In Asia, it's about 59%. In Africa, it's 17%. You know, we don't trade amongst ourselves. We still rely on imports from Europe to a large extent. And we really have to change that. In the post-COVID environment, you'll find that trade is going to be more regional, more local. People are not going to travel as they used to. And there are barriers going up. So it's very important that we look into regional markets. Somebody was talking about capital formation earlier on. We have to stop relying on the savings of outsiders to fund our infrastructure. We have to rely on the savings of Africa and Africans. And that means governments have to introduce savings policies. They have to, both at a personal level and at an institutional level. You know, in Japan, the postal savings, most people put their money in the post office. And that's what the government uses to fund the development of the country. And they get very little returns, but for patriotic reasons, they still invest. In a lot of countries, you have, you know, national savings. So we have to encourage this kind of schemes. That's how you develop capital formation. And then we'll start using local currency to fund your infrastructure. How can you imagine you're collecting tariffs, your payments for electricity in Naira, and you're funding your infrastructure in dollars? Every time you have a devaluation, electricity becomes unaffordable. So first of all, that is not viable. Another thing, even in terms of infrastructure, you have to have shared infrastructure. So we have significant hydro resources in certain parts of Africa, like Central Africa, and solar in the Sahel region. And we have to be able to trade electricity. You know, part of the reasons why electricity is not viable in some countries because the utilities are bankrupt is you are depending on a single buyer model. What we're trying to do at the African Development Bank is to build regional interconnections. You know, I can generate my electricity in Cote d'Ivoire and sell to Mali. And it's often cheaper because in Mali, they're relying on very expensive fossil fuels. So, but it's important, and this brings us to the issue of currency. If you're all able to pay in the same currency, it just makes it easier. It removes the currency risk. And the capital formation that we're talking about, if I can rely on the savings of Ivorians, because we're all using the same currency, we can pool our resources much better. You'll have a larger pot instead of these small pots of money that we have. You know, within Africa, you have 54 countries using about 40 different currencies. And those currencies by themselves, and those economies are not necessarily sustainable or viable in of themselves. So they're perpetually depending on aid for survival. You know, we had more inflows from remittances than from capital markets activities. If you look at a period of between 2014 and 2018, you had $32 billion worth of remittances versus $11 billion worth of equity capital markets activity. So that means we're still depending on the people. The biggest export we have is our people. We send them all over the world and then they send money back. So for that reason, we have to get our acts together. You know, currency union and interregional trade. Perhaps I should stop here.
Absolutely, thank you so much, Wale. Fola, let me come back to you. And we've talked about the challenges. We know what they are. I remember Mr. Yofi did mention some of the issues that we still see when it comes to financing key projects. He talked about policy inconsistency, government policies also being at variance. But I want to ask you, Fola, what structures give banks or financiers comfort when looking to fund projects in Africa. Perhaps you can be specific. I remember the Azura Edo IP independent power plant, and the success of it and how much attention it grabbed, and the fact that it was said to be to serve as a template for further investments in the power sector. It was Nigeria's first true project financed IPP. So I just want to hear your thoughts in terms of what specifics, what are those things that give financiers and bankers comfort when it comes to financing these projects?
Thank you. I think first of all, I'm going to answer your question. It's a very important question. I'll answer it. But first of all, there's a point I don't want us to miss on the capital formation discussion that we just had. I think Wale gave a very good summary of what the issue is, and he mentioned Japan and the savings culture. And he talked about the currency, which we've talked about, several speakers today. I think one thing we have to realize is that the biggest constraint to capital formation, in my view, in Africa, is inflation. So for as long as you have high levels of inflation, what you have is that you're eroding the savings of the people, whether it's savings in pensions or it's savings from their day-to-day work, whether it's investment. Savings and investments are hindered by inflation. And inflation is also ultimately what leads to devaluation and what leads to the instability in the currencies of many African countries, not all, but many. And so governments, in my view, if we want to achieve the best possible results in terms of capital formation in Africa, the way to do it is to defeat inflation, which is good macroeconomics, which is good fiscal stability, and which is also all those good things. So that's that on capital formation. To your question about projects, Azura was an amazing project. At Africa Finance Corporation, we were indirectly involved in that. I mean, everybody was involved in the success of Azura. A lot of hands were put together to ensure the success of that project. And it's an amazing test case of what can be done if you follow the guidelines of what international investors are used to seeing in a large-scale infrastructure project, because ultimately they will fund what they're used to. Bankers are conservative. That's how we are. That's the nature of banking. Bankers are not trying to take unnecessary risks. They're trying to take an appropriate risk for an appropriate return. And so projects have to look a certain way. Azura is a good example, but I think a more specific example that I'd like to talk about where we've seen the success, and it talks to the bigger picture of the future of Africa, is, as I was saying, in Gabon, where we have been involved for many years. One of the most successful projects, actually, that AFC has been involved in has been an export-led industrialization theme. So it's an infrastructure project, it's a port, it's rail lines, it's an airport, it's a special economic zone within one complex. And the goal ultimately is to ensure that the natural resources in that country and the substantial natural resources in that country are being efficiently exported in exchange for foreign currency. And beyond efficient exports, that there's also processing that is going on within that special economic zone, and that jobs are being created for other smaller businesses, small and medium enterprises that are coming to co-locate within this zone. Now, why did we make that investment? Because it checked so many of the boxes that you're looking for. It has a stable, sustainable, long-term source of foreign currency. We are a foreign currency financier, and that's a project with a stable, long-term source of foreign currency. It has, the government's support, strong government support in terms of the special economic zone, the legal and regulatory environment around which the entire project is being governed, has strong government support beside it. Good partners, so expertise is often taken for granted, but expertise is one of the most important things in the success of projects. In that project, we worked with a large large multinational, originally from Singapore, called Olam, who were heavily involved in originating and developing that project. Plus, they're a major exporter from Gabon already, because they're a global commodities trader. And so they have throughput of things that need to go through that critical infrastructure. And that gives us comfort that this infrastructure will be used and that it will earn income, and that income will repay us on our investment. So these are some of the key themes that we think. There are several others, and we can talk about it. It's a whole seminar on the things that you need to see for investors to be comfortable. But these are some of the key things that you need in projects.
Thank you for that. Gbenga, let me move over to you now. From what we've heard so far, there are opportunities, obviously there are challenges. We've talked about what the challenges are, and I think we should begin to move on to, okay, now that we know what the challenges are, okay, that on one end, and right now we've also found ourselves in a new reality. We are seeing more capital flight out of the continent, because of the COVID-19 pandemic, and we're seeing there's talk about a rising concern about a potential debt crisis, widespread debt crisis on the continent. Now, we've talked a lot about the government side also, inconsistency in policies, and of course, and the fact that the private sector can actually play a key role. I'm just wondering, what would be good first steps to take? We know that there are innovative ways, but I'm just wondering, because there has to be buy-in from both the government, because regulation, policies, they all matter too, if we're bringing in financiers or finance. So how do we get that first? How do we move from point A to point B first to get everyone on the same page and begin to see the change that we need so that we can begin to get that much needed finance for critical projects?
Okay, thank you very much, Esther. This is very, very profound. I'll take it from what we do in UBA. UBA is present in 20 African countries, and we operate from United States. We operate in the UK with rep office in France. Today, regional trade is and financing is what has become a strategy that is helping us to penetrate the African markets. We have regional financing that is riding on the back of what we call the GAP structure. GAP structure is Global Account Management Structure, which we have put in place, where we have private sectors operating in more than one markets, being financed by UBA in those markets. We have instances where in Mali, Cote d'Ivoire, Senegal, Burkina, Chad, Cameroon, Nigeria, and all other countries where we are present, where we have a financing structure that we put in place that enables us to finance private sectors, even as well as government institutions, government projects, right within Africa by UBA, a Pan-African bank, providing those solutions to businesses, private sector, as well as government infrastructural development. And this is what speaks to what I said, African solutions to African problems. We're not looking at international financing organizations, multilateral organizations, but if we have the likes of UBA doing this, and then we are able to have a lot more of Pan-African banks in the various regional blocks, financing infrastructure and providing those solutions, it is going to be the turning point for African development. And let me say this, for intra-regional trade to strive, there is that profound need for clear understanding of the local markets. And there is no one that will understand that local market more than we, the Pan-African banks. And that is what we are doing today. And that is why we are stepping in to fill the gaps left behind by European and American international banks. Because they do not understand the market the way we do. We are African banks, we are Pan-African, we understand the market, and we are providing those solutions, right, to support and develop Africans. And that is what we need to do. And for this to be taken to go further, to develop in a manner that we will begin to see the transformation in our economic prosperity, there is a need for us to handle certain things right. And that is one, corporate governance structures of our private sectors. That needs to be clearly given top priorities by private sectors. Because if you're going to finance project or finance business interest, we want to look at how the standard of the corporate governance in those institutions are in terms of transparency, availability of information, and the credibility and reputation of the chief sponsors of those projects. So that is where we need to take it from. And then riding on the back of that is what I said earlier about the currency contract convertibility, where we are able, I'm able here from Benin, I'm the MD of UBA Benin, where I'm able here in Benin to finance projects in other countries, not necessarily by looking for dollars, but by using that with my local currencies or regional currencies. So we need the likes of UBA, that is a Pan-African bank, to do a lot more, which is what we're doing, to do a lot more in that space, to tap into those opportunities and support the various business interests. And if we can have a lot of that in the various regional blocks, that is going to make a lot of difference to what we are doing. And also, yeah.
Thank you, Benga. Yofi, let me bring you in here. You just listened to Benga talking about African solutions to African problems and the fact that he believes that Pan-African banks can step up to the plate and finance big critical projects. I just like to hear your thoughts on that, and also perhaps you can give us a perspective from on how Ghana is approaching the issue of trying to get the government and the corporates to attract financing to key projects. But I'd like you to first speak to the point on the Pan-African banks in Africa stepping up to the plate.
Right. I think it's a very noble idea, and that is where we naturally should be. But we must also recognize that it doesn't happen in a vacuum. Building a bulge bracket bank is a question of capital, and capital, being able to amass capital. And since we have a continent where capital formation has been a bit of a drag and has been long in coming, it's understandable that we haven't built bulge bracket banks enough to cover the whole continent. A few are coming up, and most of them are from Nigeria, because that's a large economy. You can find the investors there. But I think we skipped maybe three of the most critical elements that as a continent, whether by perception or by reality, we need to consciously move away from. First of all, for any form of development to take place, there must be political stability. That is non-negotiable. So I think our politics plays quite a big role in how we do our business. And that is why we are where we are. Secondly, political stability. There must be peace. But I think the biggest ideological reformation that needs to take place is mental. And my president that's President Akufo-Addo, has hit on it many times, and he started by saying a Ghana beyond aid, and now adopted to be an Africa beyond aid. We should exercise our minds away from cheap capital or cheap funding that takes us off the objective of we developing ourselves, because nobody's going to come develop us. We have to develop ourselves to the extent. Africa is potentially the richest continent in the world, yet has the poorest people. Totally unacceptable. It's a mindset area view as well. And yes, Benga spoke about the ability for capital formation and the savings rate. We are basically a consuming continent. For a continent with all the resources, we export the resources and import the finished goods from Europe and America and Asia, when we should be exporting the finished goods to them, because we are not monetizing our assets, like I said before, our resources. So that is where I think we should start from. But we are taking baby steps. And then the third, of course, which I mentioned elaborately, is regulatory frameworks. And those regulatory frameworks are diverse and perverse. It's more difficult for me to go to Congo today than it is for me to go to London, Paris, New York, Dubai, or China. Why should that be? I mean, it just can't be. So those bottlenecks and bureaucratic bottlenecks are there that we need to eradicate for us to be able to open the doors, for us to now start looking at markets. And definitely regionalization is a key, I think is a key driver of development in the African continent. We first of all need to look at how we can standardize our business operations and not have this market asymmetry, which was well expressed, that having different currencies that are not even convertible in itself is a barrier. We do quite a lot of business with Nigeria. And you know that all the business with Nigeria is conducted in dollars. Meanwhile, Nigeria is just an hour away. How do we develop out of that? And I think that's one of the critical things that we need to look at. I mean, yes, was it Benga who spoke about corporate governance? Clearly, that's the elephant in the room, and somehow we all haven't spoken about it. Corruption. If you look at the amount of capital flight from the continent, it would have developed this continent 5 times over. So we take our own money, take it to outside banks, then they lend it to us at exorbitant rates, which we cannot pay. And then we are accused of a debt crisis. You know, it's just unthinkable. It's simply unthinkable. That why do we do that to ourselves? And I think those are things that we should speak more about. We know the structural barriers. Those can be resolved. But if the ideological issues are not resolved, then we'll be at the same spot. And we've been at that same spot for almost 2 or 3 decades. We are moving at baby steps, but we need to move faster. So those are some of the issues that, for me, jump up again. The good legal framework is very important. Governance is critical. Political stability and consistency in legal frameworks are what to open the doors for it to happen. If you take some of the countries that have had significant business sector reforms, and I'll mention, and I think I should mention them, Rwanda, to some extent, Ethiopia, Mauritius, it's no surprise that the rate of wealth creation in those countries is faster than the rest of the continent. Because the business person, and let me just give 30 seconds, the business person looks for opportunity and access. If you put barriers there, that opportunity and access is not there. If you remove them, the private sector in Africa is extremely entrepreneurial. Trust me, this continent will grow faster than any other continent in the world.
Thank you, Yofi. Bengal, Wale, let me quickly bring you in. We've heard, well, so far, what I've heard so far is, yes, there is progress, but we're taking baby steps. And I'm just wondering, well, we're taking baby steps, but we appear to be at a time and an era where we definitely need more than baby steps to make more progress. Yofi also mentioned corporate governance and has referred to it as the big elephant in the room. I think perhaps maybe I could leave that to the end of this conversation, but I'd like to expand this conversation again. Now, obviously, Africa needs to evolve from commodity dependence to industrialization. We've heard a lot about the fourth industrial revolution, which is ushered in artificial intelligence, machine learning, robotics, etc. Now, obviously, the transformative impact of this revolution is something Africa cannot afford to miss out on. Are there any initiatives, just very briefly now, we're fast running out of time, that could you talk to us about 1 or 2 initiatives that the African Development Bank is spearheading at this point to ensure that at least we can begin to fully embrace industrialization and stop being so dependent on our primary commodity exports?
Yeah, thanks again, Esther. I mean, most people will be familiar with the high 5 priorities of the African Development Bank. You know, the light of empower Africa, to feed Africa, to industrialize Africa, to integrate Africa, and to improve the quality of life of Africa. And under each of those high 5 priorities, we have quite a number of initiatives to speed up this industrialization agenda. So, like I said, on the Light Up Empower Africa, obviously you have to have electricity before you can do anything else. So that's the key number 1 thing. And so we have an agenda to help drive universal access in Africa, you know, by 2030. It's in line with the SDGs. And so we're creating regional interconnections, like I said, really boosting renewable energy and sustainable energy. Under our Desert to Power initiative, we're creating the world's largest solar zone, you know, to generate sufficient power to serve 250 million people. So, and then on the youth program, we have Jobs for Youth, where we are teaming up with the likes of Microsoft, etc., to run coding classes for young people in order to be able to create jobs. Africa has significant arable land for development. So we have a big agricultural agenda where we're improving technologies to allow seeds to be more resilient and to boost the production of African farmers. We're investing significantly in gas. Mozambique LNG was a $26 billion investment, the largest FDI, foreign direct investment in Africa last year. And we're involved in that deal. And it's going to exploit the gas resources of Mozambique to be able to start utilizing the gas both for export and internal purposes. So there are quite a number of initiatives that the bank is driving because, you know, Africa cannot develop without industrialization, and that's absolutely key. We recognize that. The thing is that we have a young population and they're very entrepreneurial, and we can see the investment that's coming in into tech, both in Nigeria and also in places like Kenya to take advantage of that entrepreneurial spirit. So perhaps I should end here.
Okay, well, our time is fast spent. I think because this was meant to be a 45-minute conversation, I think we have about 5 minutes left. But what has come through so far is that, as I mentioned earlier, clearly the opportunities, but it would appear that the challenges obviously still outweigh the opportunities. But then it would appear also that we know what to do on the private sector side, on the government side. Government policies obviously can be better. We can have more synergy between the private sector and government, and we need to have that capital formation. So I'm just wondering, are we treating this with the sense of urgency that it deserves? Now we're in a pandemic, everyone is looking inwards right now. We've talked about how Africa as a continent needs to rally around itself to begin to fund those much needed projects, big capital projects on the continent. So just final thoughts, starting with Fola, how do we drive better cross-border collaboration on this? I don't know, either through currency, if that's still possible at this point. What good first steps should we begin to look at that can perhaps, for lack of a better term, perhaps quick wins that we can quickly achieve to get us there? Fola.
So thanks, Esther. Personally, I'm an incrementalist by disposition. I believe that the best way to improve is to start with the easy, good things that you're supposed to be doing anyway. Just simple, good behavior. And it's not rocket science. So good governance around procurement, for example, is an easy, quick win that any country can implement any day of the week that they pick. Good governance around currency in a country like Nigeria, in my view, there needs to be much more flexibility around currency management. So just the basic good behaviors. I think those are some of the quick things. Nothing big that can be done. In terms of, if we talk about big things that can be done, certainly at AFC, we're big supporters of the Africa Continental Free Trade Agreement. We think that is something that has the potential to be transformative for Africa. And if anything, if Africa wants to rally around one initiative out of this pandemic, we think that's something that we should rally around, and we should drive closer integration between markets, and we should drive uniformity, standardization, and cross-border trade between African countries. So that's an opportunity that existed before the pandemic, and we should certainly drive it now that it's increasingly important. Fiscal responsibility, it's not rocket science. Consolidating on the cost of government, reducing it, and then creating space for the private sector to get involved in investing in the infrastructure. These are things that can be done immediately in most African countries.
Thank you for Lagbenga. Your closing thoughts?
I think it's high time for us in this continent to begin to look inwards, starting with having our external reserves in African currencies. This is very, very important. Why should we have over $600 billion by investment? We're talking of low infrastructure development. Why can't we look within to say, okay, Nigeria, I'm going to have X percentage, say 5% of my current external reserves in South African rands. I'll have maybe 5% or 2.5% in Ghana cedis, and then I will have X percentage in Botswana, Pula. So that's the way for us to start with. Then we need to look at tariffs. Our tariff system should be able to encourage that, yes, we are Africans, we have African interests, and we want to develop ourselves. Therefore, look at the tariff system and then be able to review in a manner that will encourage regional trade. For me, this is the first step to show that, yes, we have confidence in ourselves and we are desired and we are willing and ready to transform our own continent. Thank you very much.
Thank you, Benga. Yofi.
Quick three things. One for me that clearly has demonstrated that it works is that we should ensure that we incentivize our local businesses. That's one. So even as a country, when you're looking at incentives for investment, those incentives should be directed towards our local businesses. Then secondly, we should facilitate a way of credit ratings and find real risk-rated lending among our indigenous businesses, and not focus it all on multinationals because they are blue chip, and then the locals fall into another category. When we start rating our small indigenous companies and force them to do things correctly to access finance, we will improve the general business arena. And then, of course, the ease of doing business, which is a government intervention, which should look at. Governments should look at that seriously. And the last, but not the least, is we should own our own data. The currency of the world's future is data. As we speak, I'm not sure of any country that owns its own data. If you want information about me, it's easier for you to go to Google and Google your figure out, and you get everything. Meanwhile, you can just pick up the phone. You should have naturally just picked up the phone and dial into some network in Ghana and get it, but it's not there. We don't own our own data, and we are still not feeding ourselves. Those two critical things, because if you can't feed yourself, you can barely do anything else. You're held ransom by the world global chains, value chains. And if you don't own your data, then you are sitting duck for other producers in other places because they know what you want and they'll produce it for you. We should know what we want and produce it for ourselves. Thank you.
Thank you very much, Yofi. Wale?
Mute.
Can you hear me now?
Yes, go ahead, please.
Okay, so for me, there's no doubt that we have to invest in our infrastructure. You know, right now, Africa, per capita spending on infrastructure is about $25 per head, whereas India spends $48 per head. China spends $150 per head, and the United States $300 per head. So for that reason, you know, ease of doing business, we can't do anything without efficient infrastructure. It's absolutely critical. And we have to find a way of funding that infrastructure to the extent possible in local currency. So when you go to South Africa, you will lend to them in rand. The African Development Bank has 11 lending currencies. But you find in a lot of markets, the markets is not deep enough to be able to raise money in the capital markets to lend. And we've talked about inflation. So we have to develop our local capital markets so that when you pay your electricity bills in CD, you're not having your bills go up because the CD has been devalued against the dollar. So that's critical. We have to invest in education. Education, and we've also seen healthcare, very critical. We have young people, we have to develop their minds and they have to be healthy and we have to give them good food. So agriculture is also particularly important because it develops the brain. You have productive people. So once we start spending more on developing those things rather than on imports, I think then we'll start to move forward as a continent. Thank you.
All right, thank you so much, Wale, and I must thank you all today for being a part of this panel discussion. So just a brief summary. Obviously, we started out looking at the cross-border financing, on the continent, looking at innovative ways. We talked about the challenges, we talked about the opportunities, but more importantly, what we can begin to do as African countries, as a continent, to begin to remove those barriers and focus on those innovative ways to fund critical projects. And I like what Benga said at some point, where he said, you know, Pan-African solutions for African solutions for African problems, and the fact that he strongly believes that Pan-African banks can step up to the plate. We're already seeing UBA doing that. So obviously our hope is that we can get more Pan-African banks, more Pan-African financial institutions to step up to the plate. On the issue of currency, perhaps we can also achieve that in the not too distant future. And of course, I think someone also mentioned the issue of corporate governance. I think that was Yofi as a big elephant in the room. We need to address corporate governance. We need better institutions. And I think Yofi also mentioned regulation, the differences in regulation on one hand, and of course, variance between government and public sector, the fact that government and private sector there should be that strong handshake between both parties to see this through. So as I said earlier, I think I said that at the top of, at my opening, that this is a conversation that's being championed, being led, spearheaded by United Capital. It's a first in a series of more tele-conferences to come. We're United Capital is looking to drive this conversation, because we're at a time when we're in a pandemic, and it would appear to be everyone for themselves. So we obviously need to look inward and begin to have those necessary and critical conversations about Africa's future. We are on this journey to economic prosperity. No one is going to solve our problems for us. We need to feed ourselves. Like Yofi said, we need to have our own data. We need to begin to take advantage and take charge of our destiny as a continent. So I'll now quickly move over to our question and answer session. Earlier at the top of the show, I did ask participants to send in some questions, and I think I see one from YouTube. So Abidin Alade says, thank you, Wale. What are the key steps needed to accelerate capital formation in the region? Do differences in the legal system as Anglophone and Francophone pose any form of barrier to achieving this? Wale, that's a question for you.
Can you hear me now? Yeah.
Yes, go ahead, please.
There are quite a number of differences. Obviously, legal, even language, and regional tourism. You know, before I moved to Abidjan, living in Lagos, I didn't know very much about Abidjan. So we need to encourage all those cross-fertilization of ideas. And it's very important that we integrate our capital markets and break down these kind of barriers. Obviously, the political barriers as well are there. Right now we look to the former colonial masters and route a lot of businesses through them. Rather, some people will fly via Paris to come back to Africa. We can't continue to do that because we're losing money. So just better integration. The good thing about what's going on at the moment in this COVID environment, the AU is playing quite a significant role. So for instance, in terms of medical supplies, you know that the AU Central for Disease Control is aggregating the orders to be able to place bulk orders on behalf of Africa. Otherwise, we'll be at the bottom of the list because everybody is placing orders with the same people. And unless you can aggregate our orders, you won't be able to get the scale that you need. And we have to do that as Africans in a lot of different areas to be able to punch above our weight. Absolutely.
The next question is from an attendee on YouTube, and this question is for Kofi, and it's sent in by Kazim Shumade. He says, it is obvious that African governments cannot do it alone. What do you think the government of African countries can do collaboratively to encourage the private sector to be a part of this process? Yofi.
First of all, we need to ensure some sort of standardization in the sort of legal regimes that we have. For example, there must be tax consistency across borders, but we also must build regional businesses, not just indigenous small businesses. Definitely, most foreign direct investors going forward, I believe, would look at regional plays, opportunities, and that's very important. But I dare say, and maybe I'll steal a bit of thunder from Wale, to say that the Africa Investment Forum sponsored by the AFDB is probably one of the best things to have happened to Africa, because it's highlighted significant opportunities on the continent. And the second one raised significant money. And that's the way to go. If it hadn't happened, these are deals that would have struggled. So that was a very important platform that also opened the space for foreign capital to partner with indigenous capital for projects that have scale. And then, for example, the Azura project, I'm sure if had been happened at the time of the AIF, it would certainly have been one project that would have gotten a lot of interest on that sector. But then, of course, we also need to, I keep saying, remove the barriers, the ease of doing business. Because when you remove those barriers, it's not because of foreign direct investment. It's for indigenous investors and business people to be able to do business fluidly and have predictability in the market, especially if you have a good hand on the macro and the fiscal stability and all that. And so those are very important constructs. But partnerships are very important. You come to Ghana, you see quite a number of partnerships between Nigerian business people, Ghanaians, Ivorians and Ghanaians, Burkinabes and Ghanaians because of proximity. But we are also amending our investment laws such that the incentives and tax waivers will be prioritized with indigenous investors. And if they partner with foreign direct investors, then the foreign direct investors also will benefit from some of these. So these are some of the steps, the quickened baby steps that we are taking to ensure that we trigger at least some growth in the SME, SMI size, because we all agree that Africa is significantly SME, SMI dominated.
Thank you very much, Yofi. This next question is for Fola, and it's from Anoluwapo Olowu. And the person says, I'm also into tech, and one thing is clear, we see more foreign investors financing projects than Africa's private sector. Please, is this a trust issue due to the lack of confidence in our people? Fola?
Interesting question.
Fola, did you hear the question? Do we still have Fola with us? Wale, perhaps you can step in to answer the question.
Can you hear me?
Yes, go ahead, please.
Right. I don't think it's a lack of confidence per se. We often find that financial institutions in Africa are very conservative and they're very risk averse. You know, I'm sure Gbenga wouldn't argue with me that in a lot of cases, they would still ask for those things. I mean, you have a young entrepreneur who then goes to an institution to take a loan. They'll ask him for collateral, his house and his land and all this kind of thing. And that's also because we don't have the variety of financial institutions that we need. Whereas in the US, you have, you know, angel investors, you have your vulture fund, you have your, you know, so you don't have to go to a commercial bank for everything because commercial banks are not set up to lend to startups. So we have to develop an ecosystem of financial institutions who understand the risks that you have to take at various points in the business cycle. I mean, we have startup venture capital, but we call them friends and family. You know, in a lot of African, because we need to institutionalize that to be able to have the investment to support young people and startups and tech in particular.
Thank you. This next question is from YouTube, and it's for Wale and Fola, and it's from Ejikeme Okoli. And it says, what critical steps can African development finance institutions take to manage the debt risks associated with hard currency financing, developmental initiatives in low-income countries? Do we have Fola? Wale, perhaps you could quickly take the question.
Okay, well, I mean, debt sustainability is a real issue. And we're seeing more and more of it as African countries have gone into the international capital markets and have raised foreign currency debt. That's fine as long as you're putting that money into sustainable industry, hopefully that is going to be export focused to allow you to be able to repay. But the problem is if you're borrowing and putting into unproductive ventures, then it will result in debt sustainability issues that we're seeing. So there's a lot of policy dialogue that we do to help governments manage their debt exposure. You know, there was one time a lot of African countries did not have a debt management office. They did not control the amount of debt that was being taken on by different layers of government. But once you begin to monitor all that, you can control the debt, you can control the tenor. You know, most African countries don't have a yield curve that goes beyond 5 years. And they need to be able to create different tenors and be able to restructure debt in a way that is sustainable. But it requires training, and we have to build the capacity in those countries. And we're doing that.
Okay, thank you, Wale. This next question is from Julius Ashade, and he says, can someone on the panel expatiate on collaboration between government and private financial institutions in Africa? Perhaps, Benga, you can answer that question. It's not addressed to anyone specifically.
Okay, thank you very much. I think that question is all about creating enabling environments, because that is the level of collaboration. That is where you start from. So the government must be able to collaborate, must be able to create enabling environment for financial institutions and for businesses to thrive. And that is what we'll be talking about at this session. So the role of a government essentially is not to go into building businesses, but to create the environment in terms of political environment, make it more conducive in terms of the ease of doing business that our speakers, Yofi, have spoken about at length. So it's very important also. So the level of collaboration that is required is a sustainable collaboration, is to create an environment that allows businesses to thrive, allows institutions where there are no tariff replications across regions or borders, and in a manner that I can go to any markets and finance businesses in those markets, and then it becomes something that will create that level of high regional development that we all desire in Africa. So essentially, that is my own viewpoint.
Thank you, Benga. This next question from YouTube is for Yofi, and it's from Joseph Hansen, and he says, what prevents the continent from placing more faith in local industry going forward, and with the Africa Continental Free Trade Areas commencing soon? What can be done to ensure local industry benefits most from it?
I think it's a real question that we need to answer ourselves and be a bit introspective. Why are there so many barriers for African businesses in Africa? That's, for me, the big worry. And there are many issues, most of which you highlighted, the barriers in the market, but also the issue of capacity. And the issue of what I call policy inconsistency between private sector and state, and the competition sometimes between state and private sector, where because of macroeconomic issues, the state is borrowing more from the banking sector than private sector, so crowds out private sector. These legacy issues need to be dealt with. But I believe that we are seeing a lot of movement away from that in contemporary times, where we have an energized younger population who are more aggressive in building their businesses. The collaboration between state and private sector is happening in many countries. I mean, in Ghana, we actually have a constituency for that, where once a quarter, the private sector meets with the president to jaw and have a powwow at one place. Sometimes the press is allowed, sometimes the press is not allowed. So it's dispassionate and frank. That's one. And then also, one of the big problems that private sector always complains about is the cost of capital. But that is a function of macroeconomic stability and macroeconomic indicators. If the economy is not strong out of either bad policy or policy inconsistency, then the cost of doing business is high. And I think it behoves every country to aggressively attack the cost of doing business in the country. Because if you don't have that, then private sector businesses then suffer because they can't access capital. But the opportunity is there. The fact that we are creating the largest non-tariff market means that, first of all, because those tariffs are removed, the cost of doing business for some of the companies that will take advantage of it has come down. And therefore, they should take that advantage and produce for the continent. The CFTA, for me, is the one big, humongous opportunity that Africa has to restart and then reassert itself. I mean, even with some of the external regional covenants that we signed, like, for example, the controversial and difficult EPA, there's still an opportunity to partner with European capital to manufacture on the continent, for the continent, and for export. And so we should turn some of these things to our advantage. Africa will be the single largest non-tariff market there is since WTO, which we are not even sure whether it's going to survive or not. And so that is a real opportunity for African businesses. Governments, like Wale said, need to create the enabling environment for businesses. It's not a competition between government and private sector. Governments need to make sure that the private sector survives and thrives. Otherwise, your economy doesn't grow. And then the last one is the agency cost of business on the continent. And I always shudder when I have to say that word, because very often people say it's government people who are necessarily corrupt. But there's a buy side and a sell side, a demand side and a supply side to corruption. And that's where the governance issues become critical. And time and again, we find that in Africa, governance is an issue. And if we can eliminate that, we eliminate the agency cost, and then we'll have a more vibrant and easier place to do business.
Thank you very much indeed, Yofi. This question is for Fola, and it's coming from Julius, the second question from Julius Ashadi. And he says, in addition to the previous question he asked, what are some of the background work, if any, that are in place to ensure a single currency in Africa? I heard a number of panelists state this, that this will ensure seamless and transparent investments. Fola, would you like to take a shot?
Thank you. Apologies, I was locked out of the call for a little bit earlier. So, but I was following it on YouTube, so I could follow. It's a good question. A single currency in Africa is an interesting idea. I don't know that it's a feasible idea in any kind of reasonable time frame, but it is important to have more uniformity, I think, in trade policy, in trade practices between African countries. I think the Africa Free Trade Agreement is extremely important. I mean, you can trade among countries even with multiple currencies. The most important thing is that there is flexibility in all of these currencies, so that the people can interact with each other and money can move back and forth. Systems are integrated, the banking sectors are integrated. These are all important. Now, how can we achieve a single currency for Africa? I think we have to be incremental about it. Again, this may be my personal disposition. The ECHO in West Africa is a great idea. We have to work across the continent in small pockets to achieve regional integration, to achieve uniformity, and then we expand and perhaps all merge sometime in the very distant future. But I don't think that the aim of a single currency should itself be what drives all of the things that we do. What should drive the things that we do is what are best practices, what is good behavior, what is going to allow for easier interaction between Africans across multiple jurisdictions. And this is legal systems, this is trade systems, these are government policies, these are export and investment policies. All of these are the things that the Africa Continental Free Trade Agreement is intending to address. And that's why I think that's one of the biggest opportunities that Africa has for how do you say it, for expanding development on the continent.
Well, thank you very much, Fola. And also let me thank, I'm just looking at the chat section. I do not believe we have any more questions, but I want to thank those of you who are watching, who have participated, and of course, kindly sent in your questions. And I hope that your questions were answered to as much as you wanted them to be. Now, let me just quickly also thank our panelists also. Today we've had Fola Fagbile, he's the Senior Vice President, Africa Finance Corporation. We've also had Benga Makinde, CEO, United Bank for Africa and the Benin Republic. We've also had today with us Wale Shonibare, Acting VP, Power, Energy, Climate and Green Growth at the African Development Bank. We've also had, joining us from Ghana too, is Yofi Grant, CEO of the Ghana Investment Promotion Center. Let me also thank our host for today, Mr. Peter Ashade, the Group CEO of United Capital. As I mentioned earlier, this is one of the platforms that United Capital is going to be using going forward. It's e-teleconference conversation series where conversations and topics like this on the African continent will be talked about and brought to the fore to drive further conversation. And of course, to bring about, we want to go beyond rhetoric and go beyond just having conversations. While we have these conversations, we're hoping that we'll see the commensurate action by both the private sector and the government in terms of bringing about change and helping, pushing Africa several steps forward towards economic prosperity on the continent. So, of course, our topic today has been fostering innovative cross-border financing solutions. We've spoken expansively, we've spoken in depth about what the challenges are, the state of cross-border financing solutions or cross-border financing on the African continent. So at this point, I think I'm just going to close out. We've come to the end of our conversation. Thank you once again to our panelists. You've done a very good job today. We appreciate your time. We appreciate your participation. And of course, those very insightful information all the insights you provided to us today on the topic, and we hope to see you back again soon. Also, a quick note to all who are also watching, do remember that as I said, this conversation is not over, so you can please check out United Capital's website for more. It's unitedcapitalplcgroup.com. You can also follow the company's social media website. You can find them on Twitter, Instagram, and YouTube. Of course, for those who are watching on YouTube, you already know the address. So join us there as we have more conversations, of course, to keep abreast and stay on top of the updates in terms of the further conversations that are going to happen as we go along. Thank you so much, everyone, for being here today. My name is Esther Awuni. I'm an anchor at CNBC Africa, and it's been my pleasure, my absolute pleasure, to host this maiden edition of United Capital's e-conference. See you all again very soon, and of course, please, everyone, stay safe. Bye for now.
Bye.
Thank you, Esther. Thank you.
Thank you.
Thank you, everyone.
Thank you.
Okay.